Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Monday, October 16th, 2017. Well, just like every day last week, markets are neutral to positive. It is a slow grind. Today's volume here after 3:30 p.m. Eastern Time is 25.8 million. That is on pace to be right around the lightest for the year. This is the type of volume we have now done for months in this market. Amazing one thing to look at, folks. If you zoom back and you look at the volume going back even a little ways, you can see it just continues to decrease. This is even more dramatic when you go to a larger time frame. Take a look at the monthly here. The monthly going back to really the crisis 2009 and 2008. Look at the volume here and look at how tiny it is over here. I mean, really, even in 2012, 2013, 14, and even into 15 and 16, you had bigger volume periods. But really, since 2016, really since late in the year in the elections, it has gotten smaller and smaller to the point where, again, you'd have to say to yourself, how much lighter can it get? And also, you'd have to wonder how a lot of these firms like the NASDAQ are making money. Usually the NASDAQ makes money on every share traded. They get, 20 cents, whatever the fee is, the SEC fee and the SEC fee and so forth. There are fees that are incorporated that we all pay when we buy and sell stocks. And the NASDAQ and other places get these fees. And it's interesting to see those earnings from those companies because they should be decreasing drastically. And those companies cannot be happy with the light volume because it is starting to hurt them a little bit on the bottom line. Really, in all fairness, that wasn't what I was going to talk about today. I was actually wanting to talk about a couple trade ideas that I had. Going to this chart here, I like the retail sector. I like Macys. I'm very close to picking up some shares in the research center with our members as well. Macys, good reversal off the lows. This is the daily chart, by the way. What I like about Macys here is that you filled a gap. So you filled this gap right here, which also happens to be double bottom. Take a look at that. And again, what I like about it is that it hit that level, and then you saw buyers step in. Look at the volume candle today. That's good volume. What that's telling you is that buyers swooped in with some good buy size action and bought Macys back up, and it's still down about 1.5% on the day, but it's well off of the lows, and you could even argue you have a bottoming tail in the chart here, and I think that's definitely worth noting. All right, so again, that's my kind of idea for all of you guys. Again, if you want my exact entry, if I end up buying it here either today or tomorrow morning, simply just join the free trial to the research center and you'll get access to all of that stuff. Okay, another idea here, or at least something I wanted to discuss, take a look at Netflix coming into earnings. We can take away that trend line. That's an old school trend line. Netflix continues to grind up into earnings. A lot of expectations are sky high for this company. I am not short Netflix at this time, but I am very interested in shorting it if it pops on earnings. So what I'm thinking, folks, is that you might get initially after hours a spike higher on some good information, some good earnings numbers, maybe some good subscriber increases. But then, in my opinion, up 60% on the year already, I think that it could be something that could be a reversal candidate. And again, Netflix basically reports after hours here. And remember, they talked about raising prices. So in my opinion, even if it pops after hours, I think you're going to get profit taking within a week or a few days just based on the aspect of people being a little nervous about them hiking prices. I mean, let's be honest, there are a lot of competitors out there. You have Hulu, you have CBS All Access with the new Star Trek on it. You have, all these other options out there to watch movies and watch TV shows. Everyone's making their own TV shows out there. Amazon has their own TV shows, Amazon Prime, as we know. So, in my opinion, you're looking at a scenario where the stock is already in the stratosphere. I don't know. I'm going to be honest with you. I don't know if it's going to pop on earnings. I just didn't want to short it here ahead of earnings. Instead, I'd rather it jump, 10, 15 bucks after hours real quick and then try to jump in at that point so I can at least cushion it a little bit. So even if it goes up another 5 or 10 bucks, no big deal. And then ultimately I expect it to come back in. And again, that's a trade that I will only initiate after hours if it pops up. All right, so if you see a spike of 10, 15 bucks, at that point I would start to get interested in shorting it after hours, expecting potentially a reversal in the coming days. It is a high-risk trade, there's no doubt about it. But again, you see a stock that has gone up so much. I mean, zoom out on the chart, just a little ridiculous here. Here was the start of the year. It was trading at around $120. It's now over $200 just since the beginning of this year. In the last year, it was underneath 100. So if you go back a year, folks, see this little low pivot here? What price was that? Let's go. It was 98.99 bucks. So I mean, you've literally gone up $100 in Netflix stock since basically a year ago. 1 year ago, essentially today, $100 increase. Now, again, it's a great company. Nothing to take away with it. Those of you that are bulls on the company out there, I give you all the credit in the world. I mean, it's been a great runner. My position is simply that I think it's overbought short term. It needs to kind of have a good little corrective move. And then maybe, 6 months from now, it can continue on its merry way and make new all time highs, and maybe even in 3 months or 2 months. But my goal here is basically a swing trader. I want to get in, I want to get out. I want to get in, I want to get out. And that's really all I'm looking to do. So that's another idea there on Netflix. A little bit higher risk, in my opinion. I think Macys personally, and any of the retail stocks, with the Christmas holiday season coming up, you probably see some short covering. Let's be honest, the economy is doing very, very well. You have earnings, incomes up per the last announcements from the Federal Reserve and from the jobs data, and that should at least get people to think that people will be spending more money this holiday season, and some of that pie will go to the retailers out there, no doubt about it. All right. On that note, folks, I'm going to bid you farewell. As always, a pleasure. Thanks for coming out. Thanks for watching. And come take the 7-day free trial at inthemoneystocks.com.